What is going on YouTube? This is Manny. On this episode of Money with Manny 101, what we're going to cover is credit scores 101. Essentially what I want to do is make sure before we start this channel and go into a full sprint that we understand what credit is and that we understand the positive, negatives, and to understand essentially the factors of credit and how it is measured. Like I said, it's going to be 101, so it's going to be the basics, the bare bones of it, just so we have a clear understanding. We dismiss the myths and we understand essentially what we have to do to better our credit and put ourselves and our families in a better situation. All right, let's get right into it. So credit scores 101. Credit is literally how well you manage debt. It is nothing more and nothing less than how well you manage debt. Having a great credit score does not mean you're rich, and having a bad credit score does not mean you're poor. Bad credit scores just means you manage debt poorly, and great credit score means you're paying attention to it. Now, personally, I look at my credit score probably every 2 days. So to get started, I want to encourage everyone. I'm not getting paid to say this, but I want to encourage you to download Credit Karma. Now, what I want you to understand about Credit Karma, it is not your real score that investors or banks are looking at, okay? It just shows you essentially what you have on your credit, but it is calculated differently. There's a FICO score, and Credit Karma uses Vantage 3.0 or Vantage Score 3.0 or whatever it might be. But you want to use that so you become aware of what you have. I always say that you don't know what you don't know, so you need to make sure you know where you're at before we dive into this. All of this information can be found on the web. It can be found in a book. It can be found on Credit Karma. It can be found on different types of things. It's not new. I'm literally just giving you the basics of credit score. So let's dive into it. What is credit? How well you manage debt, like I said earlier. So with that being said, there are 5 factors to it. Factor number 1, your payment history. That is worth 35% of your credit. Now, the beautiful thing about this factor is the fact that it is a running percentage of the last 7 years. So if you haven't made a payment today or you missed a payment last month, in 7 years, it's not even going to be there. So with everything you're going to learn in this video, within the next 7 years, you're going to be beautiful. You're going to be managing your money. And with that being said, you're just, it's not even going to be there. You're going to be at 100% is where we want to be. With that being said, you want to make sure that you are 99% or greater. Once you fall below 99%, it starts hurting your credit. Dive into factor number 2, credit utilization. Now, credit utilization is literally how much of your credit that you are given are you using. So essentially, how much of that given credit are you using? Let's get to the whiteboard to keep it simple. So if you're given $100 and you use $100, you're using 100% of your credit given. Okay, with that being said, if you're given $20 or $100 and you use $20, you're only using 20% of that credit. So with that being said, when it comes to credit utilization, you want to stay below 30%. Okay, you don't want to go above 30%. Don't even hit 30%. Once you're at 29%, pay it off. The best thing you could do for yourself is pay off anything you use credit, so that your credit utilization percentage stays low. Now, what I am going to say about credit utilization, it usually has to do with credit cards. It's not your cars, it's not your house, etc., etc. It's a credit card. So once a credit card gives you $1,000, don't use more than $300 because it will hurt your credit. And how fast you use that $300 also can hurt your credit. So you want to pay attention to that. But we'll dive deeper into that when we go to credit scores 201, maybe. You know what I mean? All right, let's dive into number 3 is your credit age. Credit age is worth 15% of your credit. Now, credit age, you want to be above 7 years. Now, what I want people to understand, and I want to destroy another myth, is the fact that credit age is not how long you've had credit. It is the average age of your accounts. So with that being said, let's say you open one credit account 10 years ago, and then 10 years ago, and then you open another credit account today. With that being said, one credit is 10 years old and the other credit is brand new. Now your credit age will not be 10 years because your oldest account is 10 years. This will mean that your credit age is 5 years old. It's the average of the two accounts that you have. So with that being said, you want that to be greater than 7 years, or like I say, 7 years or greater, because once you hit the 7 years, it's beautiful. This is actually the reason why I personally think I don't have an 850. My credit age is sitting at around 5 years, and I'm hoping to get that up as I get away from opening new lines of credit. With that being said, tip number 4, types of credit. Types of credit is worth 10% of your credit, and this is actually my favorite because it's where it destroys the myths that credit cards are bad. It destroys the myths of opening new accounts are bad. All of that managed well can bump up your credit. So with that being said, you want to have a diverse credit portfolio, essentially. So with that being said, types of credit, you want at least 11 accounts on your credit. 11 and up is a beautiful thing. I personally have 29 accounts and I have an 804 credit score. So I'm speaking from things that I know. I'm not speaking from, I read this somewhere. I'm only speaking on things that I know, like I said. So with that being said, the number of accounts is one thing. Now there's 2 buckets when it comes to types of credit. The second bucket is the types of account. Now, I think about 3 years ago, before I bought my first home, the only thing that was missing from my types of credit is the fact that I did not own a home, okay? So I had a credit card, I had car loans, I had student loans, I had personal loans, I had all these different types of account, but for some reason, it kept telling me that, all right, you don't have a mortgage account, you don't have a home account. So now the new thing I think they're starting to do where you having rentals or renting a property actually starts to impact your credit as well, but a mortgage account is one of the types of credit that they want to see you manage over time. So with that being said, open different types of credit that you can manage. All right. So first manage the ones that you have and then open the different types of credit that you can manage as you go. I did not start opening new lines of credit until I managed the ones I already had, because the worst thing you could do is not be able to manage what you have and be like, oh, Manny told me I should open this new line of credit. That's just gonna mess you up. Don't do that. So with that being said, the last but not least, actually no, it is the least, it's equal to the least, is your request for new credit. This also destroys the myth of having too many accounts is bad, and no, the rule is you wanna have less than 2 inquiries. So this is just your credit inquiries, the most feared. I don't want to apply because it's going to stack up on my inquiries. This is why you don't want to apply for every store credit card that pops up, every request that they send you, all these different credit cards that almost dropped names. My bad. You don't want to do that. You don't want to essentially apply for everything that comes your way. You want to manage what you apply for and know what you're applying for. The beautiful thing about this is that it falls off of your credit after 12 to 24 months. That varies on the type of credit it is. The credit inquiries essentially fall off. But that allows you to continue to apply for new credit. That's why I have 6 different credit cards and my credit score is over 800. And I plan on getting more credit cards. And that is essentially the reason why I say, once you figure out what you have, downloading that app, like I said, Credit Karma is the easiest way I could tell you about. Like I said, I don't get paid for that. I just started this channel, so I don't get paid for that. Now, my bonus for people that stuck through is number 6, the derogatory marks. Now, you could do anything you want with the top 5. If you have derogatory marks, don't expect your credit to be over a 650. And even if it is over 650, when that lender looks at your credit and they see one derogatory mark, they're gonna be like, that could be us. You can have a 750 credit score. That one derogatory mark is not gonna get you a house. I promise you that. If you have a derogatory mark, it will not get you a house. It will not get you into some of the things that you want, or it'll get you something with a higher interest rate because they're like, you have more of a risk by signing with us. So we're just gonna tack on some interest so we can make some money while you're still making your payment. So with that being said, I recommend having 0 derogatory marks, and there's beautiful ways to get those things off your credit. And I'm going to talk about that in the next videos here coming up in the future. With all that being said, credit score scales are from 300 to 850. So if you're in the 300s, 400s, 500s, it's possible to see 600s, 700s, 800s. And I can promise you that in 7 years, no matter where you're at right now, you can be at an 800. And I am living proof that managing your debt and how well you manage it can get you an 800 credit score. Now, I've shot a lot of videos before it, but I wanted this to be a one-take video. I accidentally pressed a button when I hit my pocket, so it got a little cut in it. But I want you to know that I'm talking about this without rehearsing. I'm talking from experience. With that being said, going back over the percentages, 35% for payment history, the most important. Don't miss a payment. Make the minimum payment if you have to, but do not miss a payment. And usually if you call your credit accounts, you could talk to them and let them know not to report that onto your credit. If you miss a payment and you plan on making it a little late, obviously they're going to charge you a fee. Credit utilization, number 2 at 30%. Like I said, keep that below 30%. Don't even hit 30%. Don't even think about 30%. I literally pay all ever since I've learned more about credit cards, I'm going to teach you this in the next video actually, is I manage how much interest I pay on credit cards. I've probably never paid interest in the last 5-6 years on a credit card. And all of that is just through debt management, through money management, understanding that if I buy anything, I have the cash to pay for it. But I care about my credit, so I'm going to use credit. Number 3, that's credit age. You obviously want to pay attention to that because that falls in third at 15% of your credit. But that is something you can do nothing about other than the fact that you can possibly, with inquiries and everything, new inquiries that we talked about, you can space them out over the first 5 years. And as you get older, once you get into your 30s, 40s, whatever it might be, your age of credit is going to be greater than that 7 years that we talked about. And number 4 and 5 that I pieced together because they're both 10% is the types of credit you have and the request for new credit. Now, what I want you to understand about those 2 things, number 1, the types of credit, is that it's broken up into 2, the total amount of accounts and how diverse those accounts are. So just buying cars over and over and over and over again is not going to build credit worthiness because that just shows them you know how to handle a car loan. Having a credit card, taking out personal loans to manage your credit cards maybe, that could be a way to lower that interest and get that paid off a little faster with obviously a higher premium. Getting a home if you're able to, if you have good credit. Going into the request for new credit, what you want to do for that is, like I said, space out the different types of accounts that you get, space out when you get those new accounts, and make sure that you're keeping it at 2 or below. You can scratch 2, but don't go over 3. Don't try to open 3 different accounts in 1 year. That's bad. But those things do fall off over the time period. So you want to manage that as well. And like I said, stay away from derogatory marks. Don't think, oh, I don't owe you that money, I'm not going to pay you that money, because it's going to ruin your life more than it's going to ruin that bank or I don't know, whoever you think is trying to screw you over. Just pay them, or if you don't feel like paying them, figure out how you could avoid getting a derogatory mark. Tell them, look, let's talk about this. You don't put this on my credit and I'll just pay you $50 a month. I don't think I owe you this, but over the time, just keep it charged off. Don't have any interest on it. Keep it off of my credit and I'll pay you the money. All right, family. Now, while I am giving you, credit score and financial advice, I do recommend that you take all the things that I say with a grain of salt. What might work for me and the next person might not work for everyone, and it might take time. You gotta understand that credit score is something that takes time, and all the financial advice is all about timing and making sure that you do things the right way and in the right steps. Don't take all this advice and try to apply one without applying the other. You got to make sure that you sit down, you look at the picture of where you are right now, look at where you want to be in the future, and then from there you draw up a plan on how you're going to get there. That essentially is my disclaimer. This information is just to make sure that you elevate, and that's the only point for it. It is not to mess up anybody's life. It is the road that I took and the things that I had to understand before I started taking steps forward and getting to where I am. And I'm still not where I want to be, so I'm going to keep striving and keep doing the right things and keep understanding that 7 years down the line, everything is going to be better. All right, family, so this concludes our Credit Scores 101. I hope that you learned something, and if you did not, pass it forward to somebody that would learn from this. This is a brand new channel, and I'm hoping to reach as many people as possible. So please like, comment, share, subscribe, and hit that little bell thing at the bottom so that you get a notification for every time that I post a new video. That way I don't have to blow you up on Facebook and Instagram and everything like that. Thank you for your time. Thank you for watching, and let's continue to advance and let's continue to elevate.